Well, welcome to the Monday Money Tip podcast presented by FullyFunded.Life. Hi, my name is Joe Sangle, your host of the podcast, and I'm fired up to help you with a right now relevant, phenomenal tool that I think you can get really fired up about this week. That's right, folks. This week, we're talking about how to pay off your house in 10 years or less. Do I have your attention? Well, stand by for news, as Paul Harvey used to say. So we're going to talk about how to pay off your house in 10 years and less. And I know a lot of people say, but I have a 30-year mortgage. I have a 20-year mortgage. How do I pay it off in 10 years or less? Well, there's really two ways to pay off your house early. One, reduce the interest rate. Well, in the time that I'm recording this in late 2023, that's not an option. The other way, pay extra. And we're going to talk about paying extra today. Now, I want to take you to the website. The website is wildly popular. I was broke, now I'm not.com. You can see it on the screen if you're watching on YouTube. And under here, you can click on tools, and under debt, you're going to click debt. And we're going to go over here and we're going to pull up the Early Payoff Calculator. Okay, that's the Early Payoff Calculator. It will download this Excel tool. This Excel tool already has pre-populated numbers within it. And what I love about this tool is it enables you to answer the age-old question, how much, if I paid extra on my mortgage, how much sooner will it pay it off? And how much interest can I avoid paying? So let's say you recently got a mortgage and it was 6%. Now, some of you have 2.5%, 3%, 3.5% mortgages. Many people are staying in houses they didn't think they would stay in because they're not wanting to get rid of that mortgage because it's so cheap relative to what it is today. But let's say you financed $195,000, and let's say that payment was somewhere around $1,250 a month. Okay, and in this mortgage it says if a $1,250 principal and interest payment would take 25.3 years to pay off. Well, let's back it off to $1,100. There we go. $1,175. Let's say we bought it 5 months ago. There we go. Now, I do want to make a couple notes here. You want to put in the real interest rate, the real loan balance, put it in there to the dollar, and only include the principal and interest portion of your payment. So if you have taxes and insurance or PMI, that's part of your payment, you need to remove that. So just get online, download your current statement, and it will actually pull out your principal and interest statement and separate it. You only want to include principal and interest in this calculation, okay? So $1,175 takes 29.6 years to pay off, 355 months. You've been paying on it for 5 months. Well, if you pay $50 extra, do you want to guess how many months that'll remove? I don't know, but the good news is this calculator does. We hit enter and it says, you will look at that. $50 extra a month will knock off 3 years of your mortgage and will save you $26,823 in interest. If you want to know it to the penny, that number's up here in cell B6. Isn't this awesome? And I like to do different numbers, but I do want to caution you, don't use this tool unless you want to get totally fired up. Okay. Let's say, hey, I could do $200 extra a month. $200 extra a month. How much will that knock off? Oh, it'll only knock off 9 years, 107 months, and it will save you $76,755 in interest. Isn't that incredible? You've took it to almost a 20-year note. Now let's do $500 a month. I'm not saying right now you can do $500 a month. I just like to say, what if? So you do $500. Well, $500 will take it below a 15-year note. It'll knock off 180 months. It'll knock off a whole 15 years and save you $124,149 in interest. Did I tell you might get fired up? Oh, come on now. Now, let's say you were able to get debt-free on everything except for your house. I'm talking the truck, the car, the four-wheeler, the tractor, the dirt bike, the pool, the credit card, the student loan. Let's say you got it all paid off and you're able to pay $1,000 extra a month. Looky here, $1,000 extra a month takes you to a 10-year note. It knocks off 5 months short of 20 years of your loan and will save you $157,813. Woo! I'm just fired up looking at it. So I would just ask you, Have you used this tool? Have you always wondered these numbers? If so, you should do this calculation. Do some numbers that you know you could do. Do $25 extra a month, $50 extra a month, numbers you just, I could do that. Because that could knock off 3 years. 3 years is a long time. And then think about, hey, what if this happened, and what if I got that raise and I paid that car off and I got up to rung number 6 of the ladder? Could I pay extra? How much more extra? And do the math. Just do the math and let that be fuel that powers you in your money journey. It's the Early Payoff Calculator. And I promise you, when you use that tool, it will fire you up. It will get you motivated. It gives you a bigger why, and you will be so excited. One thing that I found is helpful is with each one, just print it out. Just print it out. Try it with $50 in there, print it out. With $200 in there, print it out. You put your car payment in there, $585, print it out, and watch what happens. I promise you, you will have so much fun with this. And while you're at it, why not share it with some friends, some family, and get debt free, including that house, climb on up to rung number 9 and live that fully funded life that my house is paid for and I owe no debt to anyone, or I'm net debt free. I could be debt free tomorrow if I so chose type of lifestyle. Hey, you can do this, and we exist to help you along the way here at Fully Funded Life. Thanks so much for joining us Monday. We'll see you next Monday with another right now relevant financial tip. Have fun with the calculator.